Okay, I'm live. I'm a little curious as to how well this is going to sound and look. It says I'm well connected. Let's see. Okay, I'm going to tell my TikTok that I'm now live. So, let's see if I can get anybody in here. It would be nice to build up on YouTube because I got banned on YouTube. Build up my YouTube because I got banned on TikTok. Okay, I am live. Hold on. It's a little embarrassing how many times I may need to film this, guys. Let's see. I got 0 views, so it doesn't matter. I am live on YouTube right now because TikTok, I got a violation for absolute. I am live on YouTube right now because TikTok gave me a violation for no reason. If you want to tune in, I am looking at charts on Bloomberg and talking markets. Subscribe to nnemeth17. You can see it in my bio. There's a link there to my YouTube. Thanks. Right now, because TikTok gave me a violation for no reason. I'm live on YouTube right now because TikTok gave me a violation for no reason. If you want to tune in, I am looking at charts on Bloomberg and talking markets. Subscribe to nnemeth17. You can see it in my bio. There's a link there to my YouTube. Thanks. I'm live on YouTube right now because TikTok gave me a violation for no reason. If you want to tune in, I am I'm looking at charts on Bloomberg and my channel. Subscribe to nnemeth17. You can see it in my bio. There's a link there to my YouTube. Thanks. I'm live on YouTube right now because TikTok. This is my YouTube, and there I am. You can also go to my TikTok bio, and you'll see this link. I'm live on YouTube right now because TikTok gave me a violation for no reason. If you want to tune in, I am looking at charts on Bloomberg and talking markets. This is my YouTube, and there I am. You can also go to my TikTok bio, and you'll see this link. I'm live on YouTube. Okay. Hmm. Yeah, no viewers. Pretty expected. Actually, I expected like one or two people to come in. But let's see if anyone from my uh, YouTube will come in. But we're seeing like a pretty crazy spill, I'd say. I'm going to look at option prices for what a rebound looks like. The IV has popped so much, it's pretty crazy, honestly. My contracts that I bought went from 35 cents down to 24 cents. But you know what? Like, who cares? And like, I don't feel the need to add to that right now. It's certainly less likely now that we're at 550 versus 555 on the SPY. It's just unfortunate that I was well aware of the seasonality. I just tried to nuance it, and maybe I should have just bought puts every week. Because if it lost week 1, week 2, then week 3 it hit, it would have, more than covered the first 2 weeks. Or it could have just bought a month long puts. But I tend to think, when you have a short term reason to buy puts, you might as well buy short-term puts. You don't really need that time value. The IV was so low too, just crazy. There's QQQ puts that are up 4,000% today. Just remarkable. Remarkable. So I've been live for 8 minutes. And there is nobody in here. NVIDIA is down 10%, low of the day. Let's look at the NVIDIA chart. I did buy more NVIDIA at 110. Now it's 107.50. Yeah, the volume is starting to pick up now. At least in NVIDIA. Let's see SPY. Yeah, this is pretty crazy. Oh, I got a Luis, thanks for coming in. Yeah, you're my first guy. This is not, so I need 1,000 viewers to get any sort of organic push on YouTube. So getting me to 1,000 would be super helpful. And you did your job, so I really appreciate it. Let me know comments. How can I pull up the live comments so I can see the chat. Let's see. Live comments. What site are you using? Okay, Nick's in here. So this is Bloomberg. Yeah, this is Bloomberg, which is like the best perk. The best perk of my clients give me, because it's just the best data. It's super expensive. I would never pay for it. And you can see the S&P is bouncing. A subscription, I think per ticket, it is like 10 to 14 grand per month. It's crazy. It's at least 6 figures per year. The market is dumping, and you can see like the last 20 minutes, 30 minutes, volume's actually picked up, but this sell-off was pretty low volume, and now it's seeming to like accelerate. We don't know if this is buyers stepping in yet, or if sellers are really just pressing it. To see that, I can look at SPY, forget the function. I'm going to go here, then prices and charts, volume depth analysis. What's up, Luciano? Thanks for coming in. I think this is a good buying opportunity. Especially in NVIDIA. Like, wow. Did not expect to see below 110, especially the day after or in one day. But if you look at its PEG ratio based off consensus, it's got 40%. It should be a $160 stock next year. And I'm not a huge believer in PEG ratio, but like any way you try to quantify their growth is pretty impressive. How is my sound, guys? I can turn it up a little bit. I can turn it down a little bit. I'm guessing there's... He went full long as the market dropped. Who did? I did? I have some cash. I've just been nibbling at names that I like. And the reason why I mean China, but the other reason why I haven't outperformed is because like I've had cash for like all of the year. And that cash is only giving me 4%. Thanks, Jackson. Appreciate the comment. So I got 5 viewers in here. Hell yeah. Thanks, guys. Take this away. I'm trying to manage this one screen. I really should get a better setup, but I'm moving soon, so I'm not dealing with that until I do move. Raoul Trades. Oh, I think I may follow him actually. That's not the guy in TikTok? To go max long into September is crazy. Like, I should have anticipated a little bit better. Yeah, I think the S&P can get to 7K next year. Not when it starts the cutting cycle. It's going to start in like 2 weeks. But I think end of the year 6,000, next year like bull case is 7,000. No, I don't think we're going to get to 6,500 by the end of the year. That's too much for 3 months. September, October, November, 4 months. Like I think SPX 10,000 2030, but if we're at 6,500 early 2025, I'll start to be like, like risk reward isn't so great anymore. I'm so frustrated with China's performance. Um, yeah, it's. I mean, listen, can China go down more? Sure, like an invasion in Taiwan, like those ADRs are getting delisted. Um, but pricing that in, unless you're the type of person that cannot take zeros on any of your investments, um, I think the risk reward is great still. And I think a lot is priced in. Like this economic debacle that they've had post COVID, Baba's still executing, you know? JD's still executing. Baidu's still doing well and his huge AI upside. Um, so it's really like, can you stomach the risk? Can you stomach the volatility? Because the upside's certainly there. And then I bought some JFIN today. I bought it at 517. It's annoying because the spread is so big, so I had it at 510. And then somebody gets filled at 510, but I don't. I move it up to 515. Somebody gets filled at 515, but I don't. So I moved it at 517. That's still a 17 or 18% dividend yield. I'll show you the financials on as soon as I pull up the right volume analysis. It's really market depth. How do I get market depth? MDM. Okay, figured it out. This is like the level 2 data on Robinhood, except like actually pretty insane. So you guys can see that. Yeah, it doesn't look honestly that liquid. I'm actually used to looking at like single names on this, so I don't have like a great reference point. But you guys are seeing like the 30-day volume for SPY and the SPX is similar. It's like, but it's probably going to close at average in 3 minutes when everyone fills. So I don't pay for this. My clients do. Um, I think it's like 10 grand a ticket per month. Yeah, this is pretty cool. What is the dual book? Okay, but I want to show you guys JFIN. I also hope that Bloomberg doesn't have rules against live streaming. Definitely not, because I've seen people do it. But so I gotta switch this. Um, to USD. Okay, so the market cap is 270 million. But take away, let's see what the enterprise value is. 219, because there's 52 cash and no debt. So multiples. That doesn't make sense because they have 120 million of net income. So it's trading at 1 time EBITDA. That's pretty insane. What's up, Harrison? I'm a consultant, so I'm a contractor for two funds. TDG. I don't know what TDG is. Transdime. I feel like I've heard the name before, but I have no idea what it does. Oh, aerospace. Not bad. PEG's not great. So it's at its 52-week highs. $74 billion company. That's why I've heard of it, because it's not a little guy. Thanks for the likes in here. How many people? Oh, I have 7 in here. Hell yeah. I like that. Appreciate you guys helping me build my YouTube. I got suspended off of look at that bounce. A $2 bounce into the close. Squeeze, 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 squeeze. Please. So it's like a roll-up play more than anything else. I'm not a big fan of that. I prefer to see organic growth. But if there's synergies, you can leverage IP across multiple businesses. I see the benefit. Intel, let's look at Intel on a chart, huh? I think today's move is a little premature, quite frankly. Oh, I love that. So they're going to split. Oh, no, actually, this is too far out. Let's look at the 5-day, or what? Yeah, 5-day, 5-minute. No, 5-day, 15-minute. So yeah, split, bounce, back down. Big volume though. It's just such a yucky business. So YouTube is the best to go live, I'm certain, but it doesn't give you the organic growth. And I have the critical mass on, I mean, you only need 1,000 followers on TikTok. And if you're running a good live, you'll get organic people. But YouTube it's way more important to have that critical mass. And I just don't have it yet. I don't know if I got like 5 new followers today, so maybe I'm inching there, but I need 1,000. I had 220. So, I mean, yeah, it's just such a yucky business. Okay, so now we are going to switch to the overnight. Let's see how the futures are trading after close. So yeah, guys, we still closed below average, and we're down. How much? I don't buy that we're only down 1%. That's probably 1.8%. Maybe 2%. Do I think calls are smart here? The problem is I bought calls earlier in the day. Problem is the VIX has spiked so much. It's like, what, 20 now? Let's look at the VIX. Yeah, so it's 20.5 now. That is just such a crazy move in a day from 15 to 25. Let's look at the 3-day chart, 5-minute chart. Like, look at that rippy. So I bought calls like here. Unfortunately, it moved against me. So I want the market to rip, but VIX to come down so I can buy puts. I may be trying to trade too much, but again, this is less than 1% of my portfolio. That max I will use towards options trades of any type. SVIX, is that a leveraged product? Or is that just simple? No, it's 1x short. Yeah, I mean, if you're selling vol, that's pretty dumb going into September. Oh, I need to switch. I wish it would just keep like whatever you're looking at. Yeah, that's pretty ugly, huh? Sell vol, get blown up. Also welcome Who's Daddy. The one thing I'm noticing is my live stream is super delayed, which isn't that bad as long as like I'm getting to the comments quick enough. So yeah, volatility is actually it's actually chilling out after close. Close there, down a little bit. Oh, actually no, it closed right there. But this is an aggressive move. There's no way you can say that's not an aggressive one-day move. You guys want to look at it's options monitoring? Yeah, let's look at the options. So like, this is like, I've shown you guys 5% of all the data you can get off Bloomberg, and like all of the uses, maybe. It's pretty insane. So IV is actually still not too bad, but short term IV like weeks out, 1 week out is like 20%, but still like 15%. It's not so bad when the risk-free rate is 4%. Yeah, and it's actually kind of weird, like in the money, usually out of the money, like there's a smile aspect of IV, like in the money is the lowest IV. This is reverse. It's like that. So in the money calls have the highest IV, and out of the money have lower IV. What is L Pro? Open lending. I don't think I'm gonna like this. Loan analytics, automated decision technology for automotive lenders. Not a bad forward PE. 4% short interest. Okay, it intrigues me enough to look at the financials. DDI, I think I've heard of that one. So yeah, like I don't like this. Certainly don't like this. The downward growth may be pivoting to 15%, but nowhere near where it was. EPS at 0.27. That's not bad, but no growth. Listen, I like that. First of all, what does double down do? I like that it doesn't take on that like subprime auto risk. It just offloads it. Sort of creates a market for that. Wait, DDI is too expensive? Trading at a 429 enterprise value with 100 net income. Negative enterprise value for 3 years. A bunch of cash. That is interesting. Not a lot of growth. A buyout candidate certainly would be accretive. So this needs to be adjusted. We're learning like the adjusted net income isn't that crazy. It's in Seoul. It's in South Korea. What kind of games do they make? I can't pull it up on Bloomberg. So I do want to look at Rail, guys, because I bought Rail. I wish I bought more. Somebody in the chat was like, oh, I'm going to follow you. Like, I love Rail. Look, it's up $1. And I bought it. I bought it here and here. I had my mom buy some more, somewhere around here. And now it's up from 680, 670 average cost of my entries to 811. That's a pretty good bounce. Freemium games. It's interesting on a financials aspect. Mom got that bread. My mom does pretty well. She definitely has more money for me. So like net, if I'm gonna like buy something, like it's better if I can convince my mom to buy something than if I buy something, because her portfolio is way bigger. My brother, who's only 21, has a decent amount of bread. My sister does really well. She works for a hedge fund in investor relations, but has a decent amount of bread. My dad doesn't do stocks, which I was talking about yesterday is like the dumbest thing ever, because he's a finance guy. Or when he does stocks, it's so speculative. Are you talking about Red Dish Capital? Redish Red? I'm sure you are, because am I the black sheep? Yeah, historically, for sure. I used to think I was the lightning rod and the scapegoat, but then doing some, objective analysis, I deserved most of that. Document destruction. Is this the right company? I love New. Did you see New from IEP? I hate IEP. I don't like Icon. What's up, Andrew? Yeah, I mean, this growth is crazy, right? Boom, boom. It goes double, double plus some, almost double. Not much drop off. This is like a decent drop off, but like, you know, three, uh, 3 billion divided by 71, 30 PE, pretty good. And look at these margins improving. With this growth, an out year, um, 30 PE is pretty exceptional. Rail have room to go. I do, but I'm not going to buy more charging up. Let's look at the financials for Rail. You'll see why. So like any dips, I would say it's an ad. Um, I just don't like charging into small caps like that. Um, so enterprise value is 265. They have a lot of preferreds. Some of those are convertibles, which will dilute the equity number. Still, the revenue is growing super strong this year. This is probably low. Their net income, I don't know why there's no estimates. Let's see if we can discover some estimates. Sometimes it takes equity matrix, earnings matrix. Why is that telling me it's earnings trends? Oh, weird. Okay, so still like point. So out year, uh, call it zero point 0.5. This is trading at a 16 PE. It's still cheap, especially because I think this number is going to be more like 0.75, and more like an 11, 12 PE. I just think it's going to continue to execute over the next 5 years. So, Citrix Viewer is the way you can look at Bloomberg. You can do it in browser, but Citrix is better. So, yeah. I mean, yeah, it's trading at 6 times EBIT. EBITDA is probably 5 times. So it's still cheap, no doubt. Um, Citrix Viewer is free, but the Bloomberg is super expensive, and Citrix is useless without Bloomberg, as least as far as I know. I don't know what else you use it for. You can see how they delevered, right? So they took some of this, and some of it was PIMCO, and they gave them preferreds. Preferreds are better. You guys probably know this because um, you don't need to pay a preferred um, coupon. You can defer it. So it's not like they're going to go bankrupt because of preferreds. Yeah, schools will have Bloombergs, and they're really underutilized. Like, we had one, and it was always open, and I didn't use it nearly enough. So that's Rail. Let's see how. So closed down 2%. Pretty radical. Hmm. No, I don't pay for Bloomberg. My client does. Huge perk. Do I like Costco? Good question. Long term, yes. But I have a feeling that people are going to get out of those super safe names, and Costco is like number one example where it doesn't have debt, so it doesn't really benefit with lower rates. Every equity benefits from lower rates on valuation, cost of capital, pretty much your opportunity cost. But Costco is like probably least so. Sure, it benefits if the consumer does better, but not that much. I mean, you go to Costco to save money. You need most things in Costco. Sure, people won't be buying the premium goods in Costco, but other people might be going to Costco instead of Whole Foods because they get better value there. So Costco is not cheap on a price to earnings basis. And because it's so over the next 10 years, sure, I like it. But do I think it's going to outperform the market? Probably not. It might be like a 7% returner, ROI over the next um, 10 years, but its beta is so low that that's actually risk reward beating the market. Yeah, so here's the thing. Um, when rates go down, utilities go up, usually. But utilities, can someone remind me what the utility ETF is? And I'll show you. Utilities usually, or have just done so well recently, that lower cost of capital doesn't really help them. I mean, it's going to help them, but it's priced in. Industrials, like um, these cyclical sort of like economic, like it's not like the digital, like when we're building things and the economy is actually getting going on a real basis, um, and we're manufacturing more. Um, Industrials and materials tend to really do well. Um, I'm less of an industrial guy, more. I have a better knowledge on materials. Um, but I just do think like if we get over this, like soft landing confirmed, these cyclicals should rip, and that should mean XLU. Thank you. Too many tabs. It's saying too many tabs. Yeah, I mean, look at that. For a utility year to date to be from 63 to 76 is insane. You don't think rates will go down at all? They will on the short end, but equities are priced on the long end, and the long end was already lower than the short end. So we're seeing like a flattening out, possibly a de-inversion, which is actually more of a recession indicator than an inversion. How much is Bloomberg if you're going to buy it? Well, you can't buy a license, um, like a permanent license. So you buy it on a year basis and ends up being, if you were to buy low data, you're not going to pull a lot of data. Maybe it's 8K per month. Yeah, utilities are just so yucky. I'm just trying to think about like what is done well. Staples haven't, but utilities have, that are like these safe names. And if like we get into a risk on environment, September's probably going to be risk off. It's clearly risk off right now. Um, but like even though it's risk off, utilities are down. That's not. I mean, it's outperforming, but it's not like a. It doesn't. It's not a great um, message for like the upside in utilities and the safety in utilities right here. Real estate, I do not like real estate on pretty much every basis. Someone mentioned Iron Mountain. Iron Mountain is so expensive, but it just keeps on going up. Let's look at IRM. People think that Iron Mountain is this data center REIT. That's less than 10%. Most of it is like very industrial aspects. So it's 1.42 um, LTM EPS. It says it's going up to 2.3, which seems aggressive, right? But even 2.3, you're talking about, is that it's a little bit less than a 50 PE on the out year. Why? Why are you going to have a 2% dividend yield? I mean, earnings yield when risk-free rate, okay, maybe it's 3%. Is IRM really safer than treasuries, or is it going to grow more than I mean, like like a 10% growth rate? Maybe you can justify an earnings yield of 4 or 5, not a 2% earnings yield. So I didn't pull up the right KUT. It's not red dish red. Or maybe it is. Feels like CrowdStrike's still expensive. This can't be the right company. So I'll pull up CrowdStrike. So it's 20 times, nearly 20 times sales still. Very pricey. EPS 4.3, still 50 PE in 2026. Granted, like Nvidia, so this is really the out year, even though it's 2026. Red dish. So why is... I think we confirmed IRM, do not buy it, correct? But let's look at the chart for IRM. And you'll see why it's very frustrating / borderline impossible to short. It's that one that imagine shorting this thing. You're smoked. I just think it's too expensive. Maybe we can top ticket, but shorting on valuation is pretty tough. You tend to need a catalyst. Hmm. 2.5% dividend. They're paying out more than... So it's the type of REIT that pays out more than what it's making in dividends. So it must be taken on debt. That's not good. Not what you want to see. So KUV is again... Wait, what was it? KUT. I mean, it's way cheaper, but doing a comp of Iron Mountain, especially with the size difference, doesn't really make all that much sense. Yeah, I'm sure the contracts are good. I'm sure they're 3-year contracts or whatever, or maybe longer, but still it's where's the earnings power? Might as well own treasuries. So 4 times EBITDA. Why is their net income so low? Do they have a lot of debt? Mm, yeah, a decent amount of debt. But still, $35 million of debt, you should only be paying 3 million in interest per year. Um, Taxes are not high because their income's low. Depreciation, amortization. I mean, I guess. Yeah, I guess their depreciation and amortization is 12 million a year. 8 million is depreciation. How do you think about enterprise value when evaluating companies? So I said this yesterday. So you want to figure out what is the business worth. If I have a lemonade stand and it's trading at 6 times revenue because I have a really good lemonade stand and pretty good margins, and I make 50 grand a year at the lemonade stand, the lemonade stand is worth $300,000. But let's say I have $1 million of cash. I could use that $1 million to buy more lemonade stands, roll up a business, increase, whatever. But that cash does not signify that so if my market cap is 1.3 million, no debt, then what the enterprise value is only 300,000. So what you do is you take away cash and you add back debt, because debt and equity, first of all, you need to pay the debt before the equity is worth anything. So whatever the equity is worth is left over. And really that is what the business is worth. The market cap in this case is higher because there's no debt. And if you were buying equity, you're also buying the cash. So enterprise value is typically what people use to value a business. Free cash flow, let's see. Oh, this is in Canadian dollars. You tricky Canadians. Looks like they've been free cash flow positive. Yeah, even on a 2 equity basis. Yeah. I might start a roll-up lemonade business. TX, TR, TXRH. Oh, Texas. Were you in my TikTok live talking about this? Let's see what Wall Street says. You're short IBM. It's a pretty yucky business, but I don't know. It's not as yucky as Intel. But those, legacy technology companies, I don't like them. What is 166 divided by 7? So that's a 20 something PE. About 24. It's not bad. This growth is pretty decent. Margins look to be improving. Man, that's making me hungry. I could use a steak right now. Okay, I'll look at yeah, Texas Roadhouse looks investable. Can't say it looks like I love it, but so IBM, no growth. Call it 10 billion, 20 PE. I think this is shortable for sure. I'm going to look at the chart real quick and then I'll look at the options. Oh yeah. Oh yeah. That's shortable. That is shortable. How many subscribers do I have on YouTube? Can someone let me know? Is it 225 or lower? I'll be happy with 225. I guess I can see. Intel is, yeah, it's terrible. So what IBM puts am I looking at? January 200. %, IV. 221. I only got one. All right, well, thanks for being here, guys. I need to get to 1,000. That would be nice. Let's look at these though. Why can't I expand this? $226. Yeah. Yeah. Okay, I'm pumped about that. Thank you guys. I have to scroll down on that. I think yeah, I think that might be the right place, but let's see. Yeah, I have no idea to do this. I'm going back to the OM. ON. Yeah, let's see. So, pretty even skew on IV. Wait, so can someone tell me how to look at, because I know you can do look at delta from term structure, but I want to look at the Greeks. Negative 0.44 delta. That's pretty good, my friend. But I want to look at the gamma. Give me the gamma. Although it doesn't really matter because it's pretty much at the money. Moneyness. What is that? Display interpolated implied volatility data at fixed tenors. Someone tell me what that means. What is a tenor? Anybody have any clue? Okay, this is just telling you the IV. But what is so this was probably 100% money. This is at the money. Okay. This is 5% out of the money. So this shows you the volatility skew, whether as a smile or whatever this is, a frown. IBM's your highest conviction short. Yeah, I like it. So yeah, this is the time. 1 month out. Like you get further out, so 3 months is, I think, January, even though it's actually 4 months, but it's less. I don't know. Like approximately 22. But if you wanted to play the short in the short term, at the money would be very cheap. But look at the IV. Like look how big that smile is. But if you look at SPY, you see a frown action, meaning that people like expect it to be volatile, but oh, that completely flipped. I mean, a little bit, like 2.5%. So maybe this is what I was looking at, like 2.5% out of the money. Is this calls? No, this is both. Oh no, this is 2.5% in the money. Yeah, this flipped because I was looking 2.5% out of the money. This was at 12. This was at 12. This was at 15. So, but you can see it's like not the same smile that was like IBM. It's more like this. Tenor is time frame. Amount of time until maturity. Yeah, you're right. You're right. Let's go back to the AH. I go hard in the mother AH. This is a pretty good experience. Yeah, Bloomberg's so nice. It is not $30,000 cool though. Yeah, it's like a it's like a it's like a Bugatti. What is SGH? Yeah, 120K, cool. That's why I've always thought, and I was working with this startup company that like is doing this for cheaper, but like way less, obviously. Um, if you could do like a budget version of this, that would do really well. Like obviously, like trading view is pretty good for charting, but not everything else. There's a reason why Bloomberg's worth 80 billion. That probably should be worth more. In the public market, I think Bloomberg would be worth 200 billion. Y charts, I think I've looked at that before. A holding company manufactures memory. Seems like a Micron for desktops, or yeah, desktops last, as well as a mobile. Seems like a Micron. Thanks, Gav. Thanks for coming. I'll do this again. This was a good experience. It started off super slow, but what was that analyst recommendations? Did I just forget? Well, the analysts like it, but where is it saying their competitors? Can look at their supply chain, which would be interesting. Whoops. SPLC. Someone remember SPLC? Got it. Didn't need you guys. I'm so smart. I love this. So Micron supplies them a tiny, tiny, tiny bit. They go into 77 customers. But the coolest thing about this is you can see how much their suppliers are beating. So let's look at, and like, if they're beating, that means more demand for them. If they're beating, that means more demand from them. So you can sort of see like what's going on. Let's look at NVIDIA though. Toshiba, TSMC, NVIDIA is only 10% of their revenue. But of their total cost of goods sold, NVIDIA pays 35% of it to TSMC. The biggest buyers of NVIDIA chips: Microsoft, Meta, SMCI, Google, Amazon, Dell, Tesla, Lenovo. I don't even know what Gigabyte is, but 752 customers. Concentration in that first 7. What's missing from here that's interesting? Right? Oh, wait, it says competitors right there. Okay, so what do we have to go back to? SGH. No. AdLink, Advantech, Apacer, Aero Electronics, ATP, Calcomp, Hewlett Packard, Dell, Micron, HT Micron, Intel, Micron, Mercury, Samsung. So yeah, like, what do they really do well, you know? Toshiba. You remember the Toshiba buyout? Where, like, I'm pretty sure it was my old firm, but on the private equity side, where I got an internship. I didn't work there. CVC tried to buy Toshiba for $20 billion, and they were like, "Oh, no, we are worth way more than $20 billion." And then they were really upset. And then everyone was like, the management is so bad. So like there was a big turnover, and I think they ended up buying him for like 25 or something, or 22. So they did pay more, but it was this big debacle where they were like offended for a $20 billion offer, even though they were doing terribly. And it was a premium. Japanese are funny. They'll get offended if you make a bad offer. If you lowball them in their eyes, they will get very offended. At least they didn't pull Yahoo. Yeah. Who is, so Yahoo was trying to buy what? Or they were offered, who was trying to buy Yahoo? But wasn't off Yahoo also, uh, like, like, didn't they also lowball Google or something like that? Yeah, they lowballed Google and they could have bought them. Or Google was trying to buy Yahoo. Do I have it backwards? After Google already took the lead. Oh yeah, they could have bought them for 1 mil. Google wouldn't be Google if Yahoo bought them for 1 mil though. I do have to go soon because I'm just too hungry. Um, I think both might be correct. I think Yahoo was offered to buy Google, and then Google got ahead of Yahoo and offered to buy them. They both got turned down, and then Yahoo ended up getting sold to Apollo like a couple years ago for like the value of Yahoo Finance and some IP. FactSet is an alt. Yeah, so FactSet is decent data. But yeah, I'm gonna go in like the next 5 minutes. But I have to say, guys, I appreciate it. I don't know the functionality of FactSet though. And I don't know the price either. 226. 226. Yeah, it's not for retail. There's no retail option for data. It's Yahoo Finance or nothing. You can get screeners on ThinViz, but like this does everything. This does everything. Mm, hmm. Yeah, I need to get to 1,000 followers. It's lunchtime. I haven't had lunch yet. For dinner, I should defrost something though. What did Nvidia close at? Oh boy, Nvidia's at 105. Holy ball sack! Should I buy 5 more shares? Somebody tell me to buy 5 more shares. Who's gonna do it? Who's gonna peer pressure me? Who's gonna do it? Buy. I will buy 5 more 80, but I don't think it's gonna get there. But I didn't think it was gonna get to 105. Should I or should I not buy 5 more shares? I can put a fill till kill in. Yeah, I mean, yeah. Let's look at the MACD. Scream and sale. Okay. I'm getting some positive feedback for my NVIDIA love. I have the MACD. Yeah, it's not good. All right, should I what should the limit be on this? $104.69. Let's really zoom in here. Tick by tick. Let's see how crazy this is. Ooh. That's exciting, right? Of course I have a luxury of time. This is a long-term investment. But it's down 11%. It's traded $500 billion today. That is so crazy. Do you guys understand how much money that is? That's pretty much the whole market. Oh, no, I'm sorry. That's $50 billion. 50 billion. Not as much. Yeah, I could see how it does tomorrow, but I don't want to get up at 5:30 to see the pre-market or yeah, no, definitely 50 billion traded can make market cap go down 300 billion, as we saw today. Yeah, but it's starting to chill out. I don't know, guys. Maybe I'll buy a couple shares. 2. Buy. Limit 104.45. What should I really put it at? 105.37. Now it's moving against me. Not much. It's only 10 cents away. It's like I'm literally trying to split hairs on 20 cents. I'm moving it up. Moving it up, moving it up. Yeah, now it's running away. How much volume caused that? Not much. Market ape always. You can't market order in the AH, even for Nvidia. And you can't on small caps. I just do like the who doesn't like the satisfaction of boop boop? It's so much better. Okay, guess what I'm gonna do again? Moving it up. God damn, it's running. I don't care about. Oh, it filled. It should have filled. Your boy's rich in Nvidia now. Cost base is certainly creeping up. No, the spreads are too big to do AH buys. Okay, so now I own 27, good number, 27 shares of Nvidia. Lost $300 on it today, though. And that's not even including the after hours spill. All right, guys, I appreciate the accompaniments, however you say that word. I will see you tomorrow. I think I'm going to do this again tomorrow. Appreciate y'all. Stop straight.